Welcome back to Boni's Life, your premier destination for intellectual, accurate, and non-mainstream crypto market analysis. Today is April 27th, 2026, and we are diving deep into the currents of the cryptocurrency markets. Whether you are a short-term scalper, a mid-term swing trader, or a long-term diamond-handed investor, this episode is engineered specifically for you. We are going to dissect the market using both technical and fundamental analysis, looking at volume, total market capitalization, the fear and greed index, open interest, and liquidations. We will also uncover the hidden global events shaping these movements, moving beyond the mainstream noise to give you the real data. Let us get right into it. Right now, the total global cryptocurrency market capitalization stands at a staggering $2.677 trillion, according to CoinGecko. We have seen a slight 0.4% dip in the last 24 hours, but the broader picture tells a story of resilience. The 24-hour trading volume is robust at $88.27 billion. Bitcoin, the undisputed king, is currently trading around $77,855, maintaining a dominance of 58.3%. Ethereum follows at $2,312 with a 10.4% dominance. What is fascinating here is the sheer scale of the market, with over 17,500 coins across nearly 1,500 exchanges. But to truly understand where we are going, we must look at the derivatives market, the engine room of crypto volatility. Looking at the data from CoinGlass, total open interest across the market has surged to $123.83 billion, up 1.4% today. This is a massive amount of capital locked in active contracts. However, the 24-hour liquidations tell a cautionary tale. Nearly $298 million wiped out, a 204% increase from the previous day. Of that, $95 million came from Bitcoin positions alone and $108 million from Ethereum. The long/short ratio is incredibly tight, sitting at 49.59% longs versus 50.41% shorts. This equilibrium suggests a market holding its breath, waiting for a catalyst. The fear and greed index is currently at 48, placing us squarely in the neutral zone. We are neither in the euphoric heights of extreme greed nor the despair of extreme fear. The average RSI across the market sits at 47.53, also neutral. The Altcoin season index is at 38, meaning Bitcoin is still leading the charge. This neutrality is often the calm before a significant storm. Let us break this down for our short-term traders. If you are trading the 5-minute to 1-hour charts, the immediate landscape is defined by the battle at the $78,000 resistance level for Bitcoin. We have $180 million in short liquidations sitting just above this level, acting as a massive magnet for price action. Conversely, there is $71 million in long liquidations vulnerable below $77,300. The RSI on the shorter time frames is hovering near neutral, and the MACD is showing conflicting signals. The Binance top trader long/short ratio by positions is at 0.77, meaning the smart money is slightly net short. However, by accounts, the ratio is 0.87, showing retail is more balanced. Your trigger here is a confirmed breakout above $78,200 with expanding volume, targeting the $79,500 liquidity pool. If we reject, look for a breakdown below $77,300 to scalp down to the $76,500 support. Keep your stop losses tight. The market makers are hunting for liquidity on both sides. For the midterm swing traders looking at the 4-hour to daily charts, the perspective shifts considerably. Bitcoin has rallied impressively from the $65,000 lows, a 30% recovery that outpaces traditional equities during the same period. The daily MACD recently printed a bullish crossover, confirming this upward momentum. However, the RSI is approaching the overbought territory, but has not quite crossed the threshold. The key structural support to watch is $73,500. As long as we hold above this, the midterm trend remains bullish. Bitcoin's 24-hour futures volume surged to $61.91 billion, up nearly 99%, showing significant trader engagement. The BTC open interest stands at $57.89 billion, up 2.36% in 24 hours. Your strategy should be buying the dips into the $74,000 to $75,000 range, anticipating a push toward the $82,000 macro resistance. The recent 8-day streak of positive ETF inflows, totaling $2.1 billion through April 23rd, provides a strong fundamental tailwind for this time frame. Now, for the long-term investors focusing on the weekly and monthly charts, we need to zoom out and look at the macro environment. Since the devastating liquidation event on October 10th, 2025, the worst in crypto history, the market has been fighting to regain its footing. We saw sustained outflows from ETFs between November 2025 and February 2026, as Bitcoin corrected sharply from its $126,000 all-time high, losing over $6 billion in net outflows during that period. But the tide has turned. Cumulative net inflows since the ETF launches now stand at $58 billion. US spot Bitcoin ETFs collectively hold around $98.7 billion in Bitcoin, with BlackRock's iBit controlling nearly 60% of all spot ETF holdings. The fundamental thesis for Bitcoin remains intact. We have not seen a weekly close below $60,000 since the April 2024 halving. Even a 50% correction from the all-time high lands us right back at $63,000, which has held firm. Your strategy is simple. Dollar cost average into major dips and ignore the short-term noise. The structural floor is solidifying around $65,000. We cannot analyze crypto in a vacuum. Global macroeconomic events are the invisible hands moving the charts. The Federal Reserve is meeting tomorrow, April the 28th through the 29th. The overwhelming consensus from Reuters, Forbes, and USA Today is that Chairman Powell will hold rates steady between 3.5% and 3.75%. However, this may be Powell's swan song, with Kevin Walsh expected to take over. The dot plot is shifting, and the market is pricing in a higher-for-longer scenario due to persistent inflation driven by recent oil shocks. The US dollar index currently sits at 98.15, down 0.22%, while gold futures are trading at $4,693.56. If Powell delivers a hawkish pause or signals potential rate hikes, expect short-term volatility and a potential dip in crypto prices. But here is what mainstream media is not telling you. The Bitcoin exchange balance has dropped by 1,320 BTC to 2.45 million, meaning coins are moving off exchanges into cold storage. This is a bullish signal that smart money is accumulating, not selling. Furthermore, we must pay attention to the shifting landscape of global trade and regulation. The average effective US tariff rate has jumped from roughly 2.2% in early 2025 to 10.3% in early 2026, according to KuCoin research, adding meaningful pressure to goods price inflation. Bank of America expects this to drop to 6% to 8% by year-end, but the damage to supply chains is already done. This inflationary pressure historically drives capital into hard assets like Bitcoin. On the regulatory front, the SEC is still working through notice and comment periods for crypto rules, but the political pressure is mounting. President Trump has warned the banking sector against halting the Clarity Act, and his statements alone have proven capable of moving Bitcoin's price by 5% to 12% as documented by CoinDesk. We are also seeing massive institutional moves. Goldman Sachs has filed for a Bitcoin ETF. Kraken is acquiring Bitnomial for $550 million to launch US perpetual futures, and crypto exchanges are gearing up for a regulated derivatives market. Meanwhile, the Bitcoin 2026 conference is happening right now, April 27th through 29th, at the Venetian Resort in Las Vegas, with record attendance expected. To successfully navigate this market, you must align your strategy with your time frame, and I cannot stress this enough. Short-term traders, you must be agile. Use the CoinGlass liquidation heat maps to your advantage. The funding rate on Binance for BTC/USDT is slightly negative at -0.0064%, meaning shorts are paying longs. This creates a slight upward bias. Trade level to level and do not marry your bags. The $78,000 resistance is your immediate battleground. Set alerts at $78,200 for a breakout and $77,300 for a breakdown. Midterm traders, patience is your greatest asset. Wait for the pullbacks to the daily moving averages. The ETF inflows are your safety net, providing underlying bid support. The options open interest has surged 395% to $39.13 billion, suggesting big players are positioning for a major move. Long-term investors, your focus should be on the macro adoption curve. The fact that global retail volume fell 11% to $979 billion in Q1 2026, yet the market cap held strong, indicates that institutional money is replacing retail speculation. Turkey and India remain strong adoption markets, and EUR stablecoins have grown 12 times over. In conclusion, the crypto market in late April 2026 is a sophisticated ecosystem balancing on the edge of major macroeconomic and regulatory shifts. The data shows a market that is heavily leveraged with $123.83 billion in open interest, but fundamentally supported by institutional inflows and declining exchange balances. The Fear and Greed Index at 48 and the average RSI at 47.53 both confirm we are at a neutral inflection point. Whether you are scalping the 5-minute chart or holding for the next decade, the key is to trade the data, not the emotion. Keep your eyes on the Federal Reserve decision tomorrow. Watch the $78,000 level on Bitcoin. Monitor the ETF flow data daily and always manage your risk. The market rewards the prepared and punishes the reckless. Thank you for joining me on Boni's Life. If this analysis helped you, smash that like button, subscribe, and turn on the notification bell so you never miss an episode. Stay sharp, stay informed, and I will see you in the next one.